Hello and welcome. In this video, we're going to revisit our call option and put option purchases, and we're going to actually enter the various journal entries that we created into an accounting software. For this video, I'm using GnuCash. I've already went ahead and set up the accounts that we're going to use. We have our cash account so that we can actually purchase and transact. And to create the offsetting entry on that, I credited the capital account for $250,000 to deposit to cash. Consider that the initial investment of whoever started the Coyote Inc. business. Now, if you'll recall, on our problem statement was that on August the 1st, Coyote purchased the call option for $800 to buy 1,000 shares. So to enter that entry, we can create a note that says we purchased the option. Right, and then we can put any kind of notes if we want in there for each item of transaction. This is not a video on how to use GnuCash, so we'll just run through these really fast. So to purchase the call option, we're going to debit the call option account for $800. And the offsetting account will be that we have to pay for it with $800 in cash. All right, now on September 30th, from the problem statement, we remember that the price of Acme Rockets had gone up to $125 a share, and that the time value of the call option was $300. So to adjust the intrinsic value of the call option, we'll need to go to the September 30th date. And then we can, again, just to create a note for ourselves, to increase the intrinsic value, we're going to debit the unrealized holding gain. Or I'll take that back. To create the, to increase the intrinsic value, we'll need to debit the call option account because it's gone up in value. And if you recall, we determined that the value had went up 25,000. And then we will credit the unrealized holding gain to show that income. After adjusting the intrinsic value, remember we have to adjust the time value, and to do that we need to lower it by $500 because we were told that the value of the call option, or the time value, is $300. To do that, we will debit the unrealized holding gain account for $300, or for $500, excuse me, to get it down to $300. And then we will credit the call option. Now, on October 30th, Coyote decides to exercise the call option. To do that, now we need to extinguish the rest of the time value, because when you exercise it, the time value goes to 0. Right, to do that, we're going to need to remove the final $300 of the call option. Take that to $300. And when you do that, you'll see over here that your call option has a $25,300 balance. What that is showing is that the $25,000 that we had originally created as part of the adjusting the intrinsic value previously, and once we enter this transaction, you'll see this value go to $25,000 even. So now there's just the intrinsic value remaining. Now, we were also told that on October 30th, there is an intrinsic value. We had adjusted the intrinsic value as well because there was a change in the price fluctuation. And to do that, we needed to lower the intrinsic value by $8,000. So to do that, we will extract it out of the income account, and then we will also credit the call option account to reduce the intrinsic value down to the 17,000 that we had covered it. We had calculated in the previous videos. Now, to show the stock purchase, we simply need to debit the stock account for the purchase price of the stock, which in our case was $100,000. But we're actually going to come back and do this one last. We're going to do this entry last, just so that you can see it calculate as it goes. We need to transfer the unrealized holding gain. We need to zero that out. So to get rid of the unrealized holding gain, we can see that it has a value of $16,200. So to clear that account, since that's an equity account, is a normal credit account, we'll debit the account for the $16,200. Then we also need to actually pay for the stock, which, remember, our option, we had to pay $100,000 to buy the stock. And then we need to zero out the remaining value of the call option, which is the $17,000. And then to do that, we will zero that out. And it actually tells us the value that we need for our basis in the stock. And you'll recall that's the same value that we calculated, the $100,800. Right, so now we've purchased the stock. Now, to continue with the examples, on October 30th, we're also going to purchase a put option because we're worried, or Coyote is worried about upcoming rocket test. So to purchase the put option, we just need to debit the put option account for the $1,050. And then since we're paying for it with cash, we need to credit that account as well. Now, on December 31st, we are told that we need to just close the books for the quarter, or for the end of the year, or whatever. So we need to adjust the value. And to do that, we remember that the put option went up at an increase in value, so we need to debit the put option account by the $4,400 and up. And then we also need to show that as part of the unrealized holding gain. And that was the only entry we had to make. If you recall, we had adjusted these into a single transaction as opposed to doing both intrinsic and time values. Now, on January 30th, they're going to exercise the put option. So we will need to adjust the put option value. And to lower that to zero, or to adjust the value since the stock had the decline, we'll need to debit the amount for and then to show that debit, we use the increase in value there. All right, something happened to the audio, so I'm just going to have to do an overlay for the rest of this. Sorry about that. But here we're just entering the entries for the selling the stock. To do that, we're going to need to debit the cash for the $117,000 that we collected which is just the strike price times the number of shares that we have. To clear out the unrealized holding gain, we need to credit that account for the $41,000 that is currently in that account. To clear out the Acme Rocket stock, we just need to look at its basis, which is $100,800, and since that's an asset, we need to credit that account to close it as well. And here I almost made a mistake and entered it as a debit. Now to close out the put option, again, we can look over and see that it has a value of $42,050, and we can just credit that account to close it as well. I shouldn't say close it, to zero it out. And then finally, we need to enter in the gain for the sale of investment, which has already been calculated for us. And if you recall, the $15,150 matches our calculated value from the video 2. And that's it. Thank you for watching, and please subscribe and like for more videos on accounting. Thank you.